Welcome to Facebook Live Office Hours. You're here today with Dina and Pecky, our tax expert.
Hi, everybody.
Hey. So we're here today to discuss tax tips for home buyers, which is a really hot topic right now here in Canada. As always, please tune in. We'll be giving away a few random prizes to some selected questions, so keep your questions coming. If we haven't been able to get to all the questions, please send us a private message and our experts will get in touch with you. We'll be live for the next half hour. And just so that you know, just a quick reminder, the stuff that we talk about here today is just for general information. So please see a tax advice expert for your individual tax situations. We can start, I think. We'll give some time for your questions to come in. So we're going to start with a few questions that we had on our communities over the last few weeks. So let's start with the first question. What is the first-time home buyer's tax credit?
So this tax credit came in a few years ago, and it's basically the government trying to help first-time home buyers. Basically, if you qualify, you get a tax credit of up to $5,000. And this can be shared between you and your spouse, or if you're buying your house jointly with somebody else. But the amount has to add up to $5,000 together. So you can't be one claiming $5, another claiming $5. No, it's only a total of $5 between all the owners.
So you have to file for it together if you're married.
Yeah, so you can share it, or you can one person claim it if it's more beneficial for one person to claim it. And again, it's for first-time home buyers. So the criteria for that is you have to be buying an eligible home. And to qualify, you have to not have owned the home in the prior 4 years prior to the acquisition year.
Okay. So if you've owned a home, or if your name has been on a different lease, right? Even if your parents have owned it, but then your name was on it, then you wouldn't be qualified anymore.
Yeah, exactly. That's a very good point, because a lot of people don't think that, my parents are getting older and they're adding my name onto the deed because, just, for planning purposes, that's a lot of times happens. But a lot of people, in their mind, they don't consider that their home. But from the tax perspective, because your name has been on that home, then you actually have owned the home. Therefore, you wouldn't qualify at that point in time.
Yeah, I had a friend that was having that issue. Yeah. What about, so tell me about the principal residence declaration.
So this is really hot right now because it's causing a lot of confusion in the community. This is a new measure that was announced last October in 2016. So basically, prior to that, there was no reason, CRA the way they administer principal residence is that you can buy your principal residence. If it's been your principal residence for all the time, then you don't have any capital gains. And there was no reporting involved. But as of the tax year 2016, they're requiring everybody to report their sale of their principal residence. So basically, on your return, you actually have to state that, yes, I did sell my principal residence this year, and you have to report the year that you've acquired it as well as the amount that you sold it at.
Why would you have to pay any taxes for the amount that you sold it at? Or, what's the purpose?
So this is for CRA's information purposes. They're just trying to, because a lot of people may not know that they actually need to report it because maybe they didn't own it for all those years. So that's what the CRA is trying to figure out as well.
Oh, okay.
So if for example, if I bought a home and then I bought a second home and then I moved to the second home, but I still own both, and then suddenly I sold my first one, for the years that you own it, you do get partial exemption, but the other part, you actually have to report the capital gains.
So what if I moved back into the home before I sold it? So it is my principal residence, and I rented out the other one. With that,
so it's the portion of the capital gains is basically a fraction. So it's basically the number of years plus one for the amount that it was your principal residence over the number of years that you've owned it. So let's say out of the 10 years that you owned it, only 5 of those years were your principal residence. Then the formula is 5 plus 1. And then over 10. And then that times the capital gain, and that portion of the capital gain would be exempt. So I just want to talk a little bit also about the plus one. And the reason why the plus one is there is because in the rules is you can only declare one home for your principal residence per year. So even if you had two, so in the year especially that you're moving in and out of a house, then in that year you actually own 2 homes, right? But in that year you can only declare one of them. So that's why the +1 is there for instances where people are, moving houses, so that they still don't have to claim the capital gains.
And for you to declare it, you have to be living in it, right? Is there a certain time, like 6 months or 1 year, or?
So like I said, it's per year, per house. So yes, you do have to be living in it on a regular basis for it to consider your home. But for example, though, a lot of people may have 2 homes, one in the city and then they have a cottage. So they can actually choose between the cottage or the home in the city as to which one is more beneficial to claim as their principal residence. Because, for example, maybe the accrued gain on the one in the city is a lot more, then you would probably want to declare the one in the city as your principal residence, as opposed to the cottage.
Oh, okay. Yeah. That's good to know.
Mm-hmm. And also, it's one home for family. So if you and your spouse, you can't say the cottage is the spouse's and then the other one. So no, that doesn't work that way.
Okay.
Excuse me.
That's good. What about your kids?
Yeah, your kids.
So if your kids are over 18, can they declare?
Well, usually your kid is not on the deed, so usually they don't have to.
Okay, what about if my mom is 85 years old and she recently added me as a joint tenant to her house?
So, yeah. The rule is that you have to declare in the year that you're selling your home. And a lot of people don't think that, my mom just added me to the lease, so there wasn't no disposition there. But that's not true. There was a disposition for your mom. I mean, your mom and you can still be living in that house, right? But there is a disposition because there was a change in ownership. So even though there's no capital gains to report, you will still need to report that there was a sale because she added you onto the deed.
So if she added you onto the deed, so would I, as being her daughter, have to declare it on my tax return?
No, because you're the buyer, you didn't sell it, but your mom was the seller. Okay. So your mom would have to declare it.
So she would have to declare
yes.
it. Okay, great to know. Do I need to make a declaration on a deemed disposition?
So yes, deemed disposition, you still would need to make a declaration. So deemed disposition, we're talking about, for example, somebody who passed away in the year. And so in those instances, there's an automatic disposition. So that's what they're deemed dispositions. In those years, you would have to report the sale on the final return.
So would you have to report it when you file your taxes or before? Like, is there a time frame of when you need to report it, or?
Yeah, so the reporting is actually done on the actual return that you're filing in April.
Okay.
So if you go through TurboTax, we actually pose that question if you sold your principal residence that year, and then we'll going through the interview, we'll ask you those questions.
Oh, okay, great. That's good to know. How does the RRSPs Home Buyer Plan work?
So the criteria is very similar to the first-time home buyers tax credit in terms of, in this case, the home buyer's plan for the RRSP is you can borrow money from your RRSP to use it towards purchasing your home. So in this case, again, you have to be a first-time home buyer, meaning you can't have owned the home in the prior 4 years before the acquisition. So, and you can borrow up to $25,000 from your RRSP, and then you have to start repaying it back on the second year after the withdrawal, and you have 15 years to repay it back. So let's say you borrow $10,000, then each year, so $10,000 divided by 15 years, and then that's the amount that you have to pay each year. And if you don't repay that amount, then it's brought into income, basically.
Oh, wow. So our next question is, how long do I have to repay a HPB withdrawal?
So as I was saying, you have 15 years. You can repay it over 15 years. And like I said, the repayment amount is basically your RRSP contribution that you're putting back in. So basically, based on the RRSP contribution that you're putting back in, you declare the whole amount or a portion of that amount to be your repayment.
Okay, great. What is the 89-day rule?
Okay, so it's a very good question because a lot of people aren't aware that in order for your amount to be withdrawn, and so people think, oh, I put in money, I should be able to take it as a deduction. Yes, you can usually take a deduction, but except in the year that you're withdrawing, then there's that 89-day rule. Basically, the amount that you're putting into your RSP, the 89 days prior to withdrawal, that portion would not be deductible on your return. So a lot of people get caught that because a lot of people, for the RSP contribution, it's automatic. You know, they don't even think about it. So basically, let's say, you know, in the 89 days prior to withdrawing the amounts, you put in $2,000. Well, that $2,000 is no longer be a RSP deduction on your return for that year. So it's just something to think about if you're counting on that deduction.
So what if I'm moving? Can I claim my moving expenses if I'm moving into a new place? And when can I claim them?
Okay. So there are certain situations where you can claim your moving expenses on your tax return. And in those instances, it's because, one, you're moving because you're work or you're moving because you're study. But there is also a kilometer criteria. So you have to move about 40 kilometers closer to your workplace or for school. So if you don't meet that 40-kilometer criteria, then the moving expenses aren't deductible. And there are only there are certain things also that are that you can claim. For example, you can claim, you know, your meals, you know, because, you know, sometimes when you're moving, you have to rent a hotel for a couple of days, maybe. So those are the type of things that you can deduct. So I don't have the list in front of me, but there's basically certain things that you can, and there's other things that you can't. So it's best to go through the software TurboTax, and then that way it'll kind of trigger you as to what can and cannot be deductible.
Okay, so TurboTax will be able to pick up what's deductible. With your
Yes,
moving
exactly.
That's great. Okay.
And
Yep.
but before we move on, just in terms of the home buyers plan, I also want to mention that there are actually separate rules also if you're buying a home for somebody you're taking care of that has like a disability or something. In those instances, there are actually better, I guess, looser measures for you to be able to borrow against your RSP for the home buyers plan.
Okay. So we have a question from Nicole. If I purchased a home in 2015 as a first-time home buyer and already have my taxes filed, what is the time frame? The time frame I have to claim all my receipts for renovations? Did I only have until the end of December of that year, or do I have 1 year from the date of purchase?
Okay, there's only certain instances where you can claim your home renovation expenses. And that primarily applies to seniors who are 65 and older, because then they can take advantage of the home accessibility tax credit. And that measure was on the federal side, came in for the year 2016. Provincially is available, I think, for a few of the provinces like BC, Ontario for 2016 is the last year as well. So basically, if you're 65 and over and you're doing renovations on your home to make it more accessible for you, so let's say you're putting in like, you know, a wheelchair ramp, or maybe you're putting in a bathtub or like a bath, you know, those bathtub bars, things like that. Those you can claim as home renovation expenses, and then so therefore you can claim it as a credit. Okay. On top of that, there's a little bit of double dipping that's involved too, because it is possible to also claim those expenses as a medical expense. So generally, those are the instances where you can claim a home renovation expense.
So you can claim it. You can't claim it twice.
You can.
Oh, you can.
You can. That's
wow.
the beauty of this. So,
wow.
but of course, you kind of have to make a determination if you do qualify for the medical as well as But if you do qualify for both, you can claim it for both. So the other areas where you can claim a home renovation expense is if you're using your home as part of a business or part of or if you're renting out, like, you know, let's say the rental as a rental. So if you're earning a business income or rental income, then those are the instances where you can also claim home renovation expenses. Now, I do caution though, for rental, for example, like a lot of people rent out their basement, you know, of their home. So a lot of those home renovations, if it's like, you know, something structural, you know, something that is like, you know, a permanent, like, you know, to the home, generally people wouldn't claim those because those have to be depreciated over time. So it's a CCA, so capital cost allowance. And a lot of people don't claim capital cost allowance on their home because eventually when they sell, they don't want to have the capital gains. And so it's like, so it's some other people may say, oh, I probably won't have much capital gains, so I want to do the CCA, but a lot of people generally don't from the rental perspective.
So we have another question. To claim renovation expenses, do I need the receipts? Also, can I claim purchases for tools when doing the work personally?
Yes, you do need the receipts. When you are filing electronically, though, it's not like you're attaching the receipts to it, but the CRA does say to keep all the receipts, all the papers with respect to your filing. It's just in case that if they do send you an email for more information purposes, you have to send in those. As for tools, I'm not really sure. So maybe our care agent can answer that one.
That's great. Okay, so our next question, moving on. A lot of questions on renovations.
Yes.
I rent out the basement of my home. Do I need to report any capital gains when I sell my home?
So yes, you would need to report capital gains. So, okay, now let me start again. If this is your principal residence, generally you don't have to report your capital gains. But sometimes people do have a rental. So in the rental, if they're claiming CCA on the rental, then yes, the portion that is the rental, then you need to claim that portion on the capital gains. So let me give an example. Let's say I had a capital gain on my principal residence of $100,000. But my rental unit is only maybe 10% of my home, and I did claim CCA on it. That means 10% of the $100,000 I need to report as a capital gain.
So you would need to report.
Yeah. But if you didn't claim CCA,
yeah,
then the principal exemption applies to the entire thing, and then you wouldn't need to report the $10,000.
Oh, okay. Do I need to report any capital gain when I sell my home? Yes. So, do the same rules apply if I run an Airbnb?
Oh, so I get this question a lot because I guess a lot of people are running Airbnbs out of their homes now. So, one of the biggest differences is that unlike a rental where it's more, so for Airbnbs, it works very similarly to rental income, but I do caution in terms of the services you provide because it could turn into not just rental income but into a business. So what I mean by if you're providing cleaning, if you're providing meals, it is possible that CRA may come and say, oh, you're not really running a rental, you're really running a business here. And then as a business, then you have to report the income as a business income as opposed to rental income. And the downfall for that is because as a business, then you have to report CPP. So that's just something to keep in mind.
Okay.
Yeah.
And when does it get differentiated from being a rental to a business? Is it only if you're providing extra services, like you said, the cleaning, the food, or?
So there's no clear definitive line to be drawn. It's really a case by case basis. Like I said, if you are providing. If the closer you are to running like a hotel type of Airbnb, then I would say that it's more than likely that the CRA will consider that a business. But if you're like everybody else, where you do the the bare minimum, where you're providing maybe a little bit of toothpaste and have maybe coffee there, and then you do the cleaning once they leave, then that's more likely just rental income. And in terms of expenses for Airbnbs, like I said before, if the portion that you're renting out of the home is only 10% of your home, let's say, then you can only claim 10% of the expenses. But in terms of Airbnb, you also have to take into account how many of days in the year that you've rented it out, right? So let's say out of the whole year, I've only rented 22 days in terms of Airbnb. So you have to take that into account in terms of 22 days out of 365 times the 10% times the expenses, and that's the portion of the expenses that you can take.
Oh, so it has to do with the number of days as well.
Yeah, because Airbnb, unlike a rental where you have a permanent tenant there, months and months and months, it's a little bit different. So, and a lot of people too, they're not using that space. They're only not using that space when there's person coming in for Airbnb. Otherwise, they are occupying that space themselves.
And it's becoming really popular here.
Exactly,
right? Yeah. When can I deduct the interest on my mortgage?
So this is a really good one. So a lot of people don't notice, but in the industry, this is mortgage expenses section. There's something called the Smith maneuver. So what the Smith maneuver is basically you have a mortgage, you're paying into it, and you're building up equity. So, and then you're taking out that equity to then reinvest into maybe, stocks and stuff like that. So that is what the Smith maneuver is. When you're taking out the equity that you've built up in your home and you're reinvesting it into something else, then at those instances, the interest on that amount that you've taken out to reinvest, that interest is deductible. So that's one way of deducting mortgage interest. Okay. Another way of deducting mortgage interest is if you are running a business out of your home, so if you're self-employed, or if you have a rental, for example, a rental unit, then you also can deduct. But again, like I said, the rules in terms of the proportionate amounts, those would apply.
Okay. All right. Do I need to pay interest on my RRSP if I use the money for my first-time home buyer?
Okay, so no, there is no interest. It's not like a real loan that, if you're borrowing from the bank, you have to pay interest. That's not how it works. But basically, there's no interest on it. You're just losing out in terms of having it earning like accruing gain on inside your RSP, right? That's what you're losing out on when you're taking out that money. But yeah, no, if you're taking out $25,000, then you're just repaying $25,000 over time.
And is there a time frame of when you have to pay it back, or?
Yeah. So in terms, so if you're taking it out in 2016, so you would have to start paying it back in 2018. So.
Oh, okay.
Yeah, and you have from 2018, 15-year time frame to repay the entire amount. But each year you'll have like a minimum amount to repay. So let's say you took out $15,000. Each year you have to pay at least $1,000 back. And if you don't pay $1,000 back, then it'll just be brought into income.
And how do you know how much you have to pay back every year? Is there like a percentage or?
So it's the amount divided by 15 because it's over 15 years.
Yep.
And if you're not really sure, you can also look on your notice of assessment. CRA has it there, and then it says the minimum amount that you would have to repay. And if you don't have your notice of assessment, as I was telling a lot of people, go to my account. Sign up for my account. All your tax information is there, and including that information.
Actually, can you give us a little bit of background, since you mentioned my account, to our audience on how they can set one up and what's the process? And like a lot of people don't know that it takes 2 weeks to get that set up. So yeah.
So my account, basically you can go on to CRA website. You'll need a few pieces of information like your social insurance number, your date of birth, as well as your return from last year, because they're going to ask you the amount on a particular line just to make sure that you are who you are. So so setting that up, once you have the signed up, it takes about a couple weeks for CRA to send you that letter that has a special code on it. But generally, though, the moment that you sign, you have access to some basic information already, just not the whole entire My Account access. And the beauty about having My Account is that you can now then go into TurboTax and download your information from CRA. And that makes it really easy to complete your return, because you don't have to go and type in each T4 or your RSP amounts, everything. All of that information will be downloaded, and you can honestly be finished doing your return in like 10 minutes. It's very easy.
And with that, you have access to autofill my return, correct?
Yeah,
and
so
I heard it's 80%. It does the job for you 80%.
Yeah, the only thing that you would have to fill out that they won't have information about would be your expenses, for example, your medical receipts, or if you move, like mentioned, moving expenses. Those you would have to enter manually. But anything that is reported to the CRA, like your T4, your RSP contributions, those you can download it into TurboTax, and TurboTax will have it all in the right place. And then you just need to verify that those numbers are the numbers that you had in mind. And speaking of, one thing that I, in terms of the repayment RSP that we talked about is when you are contributing into your RSP, you have to declare part of those contribution as a repayment. So if you don't declare a part of your contribution as repayment, then that amount is considered, that means that you didn't want to repay, let's say, then that means that amount is going to be brought into income. So CRA will add that amount onto your income.
So even when you're repaying it, you have to declare it as well?
Yeah, so let's say you've contributed $5,000 into your RSP this year, but your repayment amount is only $1,000, your minimum repayment amount.
Yep.
So there's a couple options there. One, you can say, no, I want to repay this as quickly as possible and declare the whole entire $5,000 as repayment because maybe you owe like $10,000.
Yep.
Or you can just say, no, I only want to repay the minimum amount, which was $1,000, so I'm going to declare $1,000 as my repayment, and then the other remaining $4,000 you will take as an RSP deduction for that year.
That's great to know. We have a question. Can I claim any amounts that if I'm having a home rental, like for instance, if it's just a kitchen rental, would I be able to claim that on my taxes?
So the only ways you would be able to claim that is if you're a senior and maybe you're making your kitchen more accessible. So maybe you're making your cabinets, those drop-down cabinets because it's too high. Somebody who is in a wheelchair needs special access like that. Or maybe you need a special faucet, maybe the knobs thing because you have arthritis or something like that. So in those instances, yes, you can claim your home rental, or if you have a disability and you are claiming the disability tax credit, and in those instances also you can claim your home rental for the kitchen. But again, like I said, like those expenses has to be basically to make your home more accessible to you, or because you have some kind of disability and then you need specialized equipment or specialized something so that you're doing the rental. That's the purpose of the rental. In general, though, the only other times that you can claim your home rental is because you're running your business from your home. So let's say if you are a baker and you are running the bakery out of your home, then that will be the only instances I can think of where you can claim your kitchen as the expenses for your rental for your kitchen. Or if you have a rental and then that kitchen is part of the rental, then in those instances also you can claim the rental.
Peter has a question for us. Hi, Peter. I just filed my taxes, and this year I need to pay back on my RRSP for the first-time home buyers. How can I pay that money back faster by increasing the amount the amount of contribution?
Okay.
Yeah.
So yeah, you can pay back as quickly as you want in terms of the amount of contribution that you can. So and whatever amount you put into your RSP that you claim as repayments, it will not count against you in terms of your RSP contribution room. However, we generally don't recommend that people declare all of their contribution as repayment, and I would say just declare the portion that is the minimum repayment, because you can use that as a deduction. I mean, the only time that you wouldn't want to use that deduction maybe is because, that year you didn't earn that much income and you really didn't need it. But still, usually we advise people, maybe just declare the minimum amount and use the rest of it as a deduction so that you can get back some money maybe, in those instances.
Zara has a question for us. Do I have to file Schedule 7 separately, or is it automatically fill up when I use the interview option?
Yeah, it's automatic.
TurboTax, yeah.
So there's two ways to file, right? There's one, you can net file electronically, so all the information is sent to CRA as part of your return, or you can print out and mail it in. In those cases, then yeah, the T1 condensed is printed out. For your own copy, though, the Schedule 7, you can check the Schedule 7. We don't generally recommend people to print just because it takes a lot longer for them to process. So I would say, yeah, go through the interview, net file, all the information will be automatically sent to CRA.
That's great. So our next question, what if I work from home? How does that change my tax situation?
So if you're working from home, then I'm assuming you have a home office, and if you're self-employed, then you can declare expenses like your mortgage, or at least a part of your mortgage. So let's say your office is only 1/10 of your home, so 10% of your mortgage interest can be deductible, 10% of your property taxes, 10% of your utilities, things like that. So if you go through the interview, we also kind of trigger you to ask you, did you have any of these type of expenses? Then you can declare those.
And if I sold my home this year, would I have to notify the CRA?
So yes, this is the new rule this year the new rule for 2016 tax year. Basically, prior to 2016, as a principal residence, you never had to do any declaration, and your capital gains is exempt as well. However, they changed the rule. The CRA announced in October that starting 2016, if you sold your home in 2016, then you have to make a declaration that it is your principal residence. Your capital gains, if you've owned that residence for all the years as your principal residence, then the capital gains is still exempt. So there's still no impact on your bottom line, but you just need to put in that information. So in TurboTax, we actually ask you that question in the profile: did you sell your principal residence this year? And then if you said yes, then we actually will trigger you asking you, when did you sell it? When did you acquire it? The year you acquired it? How much did you sell it for? What's the address? These are information that CRA would like on the return.
And if it wasn't your principal residence?
So if it wasn't your principal residence, let's say you bought a rental property, then you've had the rental property, then that's just straightforward a capital gains that you would need to report on your return. And then the instances where you've only had it as a principal residence for a part of those years, so let's say 5 out of the 10 years was your principal residence, then a portion of your gain has to be reported.
Okay. If I rent out my condo, do I have to pay taxes? And can I deduct the maintenance fees as expenses?
So yes, a lot of people do buy condo as rental property.
Yep.
So yes, you do have to report that as rental income. And then yes, the maintenance fees, the management fees, then those are considered expenses. So you can claim that against your rental income. Yeah.
Okay, great. Great. We've had a lot of great questions today. Thank you for being with us, and we'll see you next time. Enjoy the rest of your weekend. Thanks. Bye.
Bye.
Bye.